Good afternoon, and thank you everyone for joining us today. My name is Larry Filler, and I'm the Senior Vice President and Practice Leader for the Finance and Loyalty sectors at Environics Analytics. It is with great pleasure that I introduce Catherine Brown. Catherine serves as Vice President, Marketing and Segmentation at Sonnet Insurance, a division of Definity. Catherine brings over 20 years of experience across retail, financial services, insurance, and the energy sectors. In her current role, Catherine spearheads segmentation and growth initiatives, uniting insights, media strategy, and performance analytics to drive acquisition and engagement across both digital and traditional channels. Known for her analytical mindset and cross-functional leadership, Catherine builds scalable marketing strategies that bridge media, brand, and customer experience. In today's presentation, Catherine will discuss connecting the dots, Sonnet's segmentation journey. Please join me in welcoming Catherine Brown.
Hi there. All right. Well, I'd like to thank Larry for inviting me here today, but I also am going to apologize because I'm not going to talk about Environics Analytics. At this point in time, I was brought here today to talk about Environics and all the amazing data that's informing us here at Definity to drive Sonnet's portfolio forward. But when I learned about the conference theme of connection and connecting the dots, I actually thought, hey, what's the most important thing that we need to do as business leaders? And let's go through the success and failure of how you do segmentation well, or when it kind of has a fail to launch. So what we're going to do today is I've been working in segmentation for over 15 years. We're going to go back, I'm going to take us way back to my first segmentation fail to launch. So I was young-ish still, 15 years ago, and I went away. I thought I was going to be brilliant. I was going to do all this segmentation work. We had a branch network. We did trade area marketing. We did market analysis. We took a look at our attrited portfolio, our current portfolio. We mapped locations to be growth locations versus retention markets. We did all this analytics and data. It was really a fantastic piece of work. I didn't tell anybody. I squirreled away in the corner. I thought I was going to have this big reveal. I was going to be this genius marketer that went to the executive team and kind of did like a ta-da moment. And what I did is I actually brought this guy. Do you guys remember when we used to do segmentation and it had pictures of actual people in personas? Way back before we realized that that wasn't that bright to do that, because it makes everybody just think about this guy. I think we named him like Steve or Fred or something like that. I was in front of our entire executive team and I presented this guy. Now, there was a tremendous amount of data behind. I was trade area mapping, looking at customers, looking at penetration in marketplaces, looking at his demographics, his psychographics, all of the information about Steve, Fred, insert name here. It didn't really matter because I started with the personas and I didn't bring people along the journey. So I am sitting around a table with our CEO, our CFO, our chief distribution officer, all of these different stakeholders, and they're staring at me like I'm a complete idiot because I bring forward Fred and personas instead of data, alignment, and getting people on side from the get-go. So the first question I got is our chief distribution officer looked at him and went, I've never seen that guy in our stores before. I feel like we've all kind of been there. It's like you have a persona and you go so narrow and you're like, oh, that specific person doesn't resonate with me. And then our CFO, also named Steve, he leaned in and said, how much did this cost us? So I completely failed on integration and alignment up front. I thought that I could squirrel away in the corner and be brilliant, as all young people do when they're trying to make a mark in their career, and come out with the big splash, come out with the solution to segmentation. And what I've actually learned is I was doing it 100% opposite. I was doing it backwards from the get-go. So over the last 15 years and 4 integrations of segmentation, we're going to talk a little bit more today about how to do this properly. So you only have to do it once. So you only have to launch it into market and get that synergy of cross-functional alignment up front. I do think that I worked there for 7 more years after the failure to launch that segmentation model, and the CEO still talks about the guy with the parrot on the shoulder. So that one followed me around for longer than I'd like to admit. So instead of the big reveal, what we need to do, and it seems really simple, is alignment. And you can say it, it's just one word, it's not that complicated, and everybody's like, of course you need to do that. But Cassia, who she's going to crawl under the table in a second here, but Cassia just joined the team here at Definity a few months back, and her first few months of observations were, there's a lot of people here. Like, how many more people am I going to meet? There's a lot of people in this matrixed organization. And does it always take this long to get things done? Coming from agency side and Veronix and coming to Definity in a matrix organization, I can confidently say, yes, there's a tremendous amount of people. And yes, it does always take a long time to get things done. But you get a lot of momentum. You have to align all these different areas. So when I came to Definity only 14 months ago now, what we needed to do first was sit and listen. And that's hard when you just want to get stuff done. So I had to go and sit with underwriting. I need to go sit with pricing. What is our underwriting price and risk model? Who is our identified customer? What do you look at? So let me tell you, underwriters think very differently than marketers. And historically, with the Sonnet brand in particular, we had marketing personas over here and underwriting risk and segmentation on this side with a risk model, actuaries, brilliant people, and the two had never met each other before because we didn't underpin the original personas with our data. We didn't go around the organization and ask good questions and be curious about where the business is aligned, where we have common challenges, and how we can grow with the risk-adjusted profiles. Because in insurance, I know everybody loves talking about insurance, it's really fun at parties, we aren't just selling pens. Really hard to sell pens, but we're selling risk. So we need to make sure that we are aligning to the right customer, and that when we took a look at our segmentation model too, which I will take you through at the end. Larry, I'm not going to completely erase embryonics from my presentation. We need to make sure that our target segments aren't necessarily reflective of where we've been. It's where we want to go. Where's the puck going a little bit more? So we had to take the time, and it does take time. It takes investment up front, but it is completely worth it at the end of the day. So I went around and we talked to product, we talked to pricing, we talked to underwriting, we get their inputs, we listen, we understand, we introduce segmentation, we introduce embryonics, the third-party data, what concerns did they have before we even touched the data. And then we were able to get that alignment. So Sharon was saying how fast we actually were able to get the data once we engaged, but it was 5 months of me listening and going across the organization, building some trust, not thinking I could go squirrel away in the corner with all of my individual brilliance and bring it back to the table with a big bang. You have to get that alignment up front and listen and adjust to all of your different stakeholder areas. So, I mean, what does it look like at the end? The reason you do all that alignment is because you have this kind of flywheel effect, right? You get alignment across risk. Risk enables market sizing. Market and sizing enables media. Because then we have all these pieces aligned. This should be intuitive. Once you have all that alignment, it should be obvious where we should go. You integrate it into operations. How does this land in the call center? How are we integrating our segmentation model into informing how we answer the phone? And maybe who we're placing risk with at the end of the day. We have quality indicators as well. What does a good customer quality look like? What does a negative or a customer quality look like? And how do we stitch together individual risk factors into a customer? Because in insurance, and I see a couple of my insurance colleagues across the room, they're not necessarily the same. A driver record 9 customer over here may look exactly like their neighbor, they just happen to have a heavier foot. So it's not as linear as other markets. We need to kind of triangulate against a number of different quality indicators, and those things can shift and move over time as well. And then we're a portfolio-based business, so retention. Retention should fit into quality, quality fits into retention, which fits into risk alignment. You get the full circle aspect going, and you can really get some momentum with your portfolio because you're not just focused on one component and acquisition. We're stitching it into a sustainable business as we head forward. So I did promise that we would talk about Environics, so I did eventually get there after my little history lesson and tangent. So what we did late last year is we took, you guys are all familiar with this, the Sonnet data. We didn't just take a look at our current customer portfolio, we looked at attrited customers, and we also look at quoted customers that came and knocked on the door, the front digital door of Sonnet, and we took a look at who we're attracting but not binding. So maybe who's kind of filling that consideration set part of your funnel. We put it through the PRISM model, of course, with Environics data, and then we really wanted to get into some targeting because we're not every product item, we are a risk product. So what this kind of looks like at the end of the day is we took Ontario and Quebec, so we went very regionally specific into 2 of our key markets that we're looking to grow in, and mapped that against where we're having success today and indexing against. So kids and mortgages is one of the top segments that we've identified. With Cassia's help, we put this into, and alignment with, of course, product, pricing, underwriting. We put this into 4 different quadrants to take a look at product fit. Sonnet's a digital product, so it's mostly purchased online. And we have risk parameters at the top end and at the bottom end. So we need to make sure that there is really good product fit alignment, like we don't sell watercraft, for example. So if you have a boat and you have a cottage and you have all these other accessories, we may not be the right fit for you as an insurance provider. So there was a product and penetration component, and then there's a desirability. Some of that is risk desirability, so insurance mapping and fire and flood and risk, all of those kind of pieces went into it. So we were able to say, you know, these are strong customer segments, and we want to retain them, but maybe they're not our highest growth potential. Where do we want to grow? What is our current penetration? And then where are they? Because as much as we're a digital business and everything's transacted online, it still matters where people are. Going back to the individual strategy on how to target, we went in and we did this summer a FSA test. So we identified, I think it was 8 markets at the end of the day. We had a large enough denominator, so we had 1 million households, and we went in and disproportionately invested into these markets to say, can we grow at a higher rate within these specific FSA clusters where we have alignment of pricing, product, underwriting. We looked at our historical conversion rate within these FSAs. We looked at their propensity to be university and college grads because they get additional discounts. We took a look at percentage of homeowners and credit score and all of these variables that we were able to overlay to prioritize the individual markets. We were taking a look at channel-related questions as well as business-related questions and said, okay, let's prove to ourselves and each other and go back to risk, go back to pricing and underwriting and say, how do we find more of these? If we can prove that we can grow effectively using our media dollars within these individual markets, how can we continue to unlock growth in more targeted areas? So I mean, you get some indexes, you get some red, yellow, greens. It's as much as we're going to share today. But overall, we've been able to show that we can grow in target segments, with customers that have the right product mix. So with homeowners, with the right risks with cars. We leveraged segmentation, we took a look at quality mix, we were able to take a look at historical conversion rates and where we were performing on conversion. Now, where we need to go back to, because there's always the next step, is scale. So how do we continue to engage with this customer group? It was 8 weeks, it was not that long. How do we continue to invest in these markets with these customer segments where we have aligned at-risk appetite and segmentation views to be able to really resonate? And then you'll see here as well, we were in Quebec and Ontario. I mean, there was discussions earlier today about Quebec. I don't know what to tell you. It continues to be a challenging market, I think, across all industries that I've participated in anyways. We're getting some good traction with brand. We're getting some good traction with conversion. Again, scale continues to be where we need to continue to push. Sonnet's a growth story. We need to figure out double-digit growth, and that's the reality. And flat budgets, double-digit growth. Totally makes sense. Math is going to work out there fine. So we were able to over-index in our growth segments, particularly in Ontario. And now we need to continue to identify different FSAs, go at a different level of data. Can we continue to dig? Because this is going into our media mix plan now as a targeted FSA strategy. We're just going to keep carving off more markets, keep having a champion challenger view to make sure that we can grow profitably in the right areas with the right customers so that we can grow in retention and get that flywheel going. So here's what we're going to do next. It's repetitive. I'm not gonna lie, it's not easy, else everybody would do it. We've heard a lot about data, and data can unlock great growth. People solve problems though, not data. People with data in their pockets can solve a lot of problems. But when you're trying to solve problems alone, you're not gonna get very far. So you can go, what's the saying? You can go fast by yourself, or you could go far together. That's where we're sitting here. So Environics is a great partner. They have a great amount of data, a great amount of insight. The new technology that we're advancing, like 15 years ago when Steve and his parrot, we were addressed direct mail and flyers, and that was our bread and butter in our world. It's exciting to see the evolution. We need to keep listening. Keep listening to our partners, keep feeding back and proving what we're doing right and what we're doing wrong, because we can't keep just presenting the shiny things. That's why I started with a wrong, because we're all gonna fail a bit. And I tell my team all the time, if we're not failing at least part of the time, we're not trying hard enough. We're not being risky enough. We need to keep learning. And the only way to do that is to listen and to fail every once in a while. That alignment piece, though, that is a constant investment in relationships. It's going across the hallway, talking to that underwriter, talking to that pricing person, talking to your procurement friends, going over to finance, understanding what's going on with loss ratio, hanging out with claims, hanging out with the call center, and constantly creating those relationships so that you can get that flywheel going. Because if a stick gets caught in the wheel, because you have misalignment, all of a sudden, Toronto becomes a flood zone, whatever it is. It's insurance. We're always a little nervous about everything. So we need to know that. We need to be stitched up with them because we can't just be sitting here 6 months later and be like, hey, our conversion dropped off by 50% in Toronto, what's going on there? And they're like, oh, we don't want to write risk there anymore. I'm like, well, we should maybe be stronger communicators. And as marketing people who are spending the money, we need to lead that charge. So that's broadly what I pulled together for today. A little bit of a history. I think that this is really valuable data and information. I think that when you have this level of alignment, when you integrate it into your media strategy, Ashley on our team says, what's old is new again. We're getting back out of home. We're taking a look at more traditional channels. We are an online organization, but we need to think a little bit more integrated with the consumer. Keep reinventing yourself a little bit, but anchor on the data and lean into relationships, because we can't do things alone. So wow, I have 9 minutes. I talked faster than I thought I was going to. But if anybody has any questions, I'd be happy to answer.
Hi, back just over here.
There
Hello.
we go. Okay.
Hi.
Hi.
Just curious with your testing objectives and strategy development, did you do that as just a team, or did you involve other stakeholders in creating those? And if you did, how did you go about doing that?
Yeah, great question. So we came up with the framework of the test. We identified that we wanted to go heavy and integrate into individual FSAs and markets to disproportionately grow. But through cross-functional alignment, we found those markets. We didn't just go and say, yeah, I got a good deal on out-of-home in Burlington, so let's go to Burlington. Another important piece of the FSA test that I didn't mention was we still have a really hard time targeting people in transit. So with risk, we don't necessarily, there's no regulators in the room, right? We're okay. We don't necessarily want to grow everywhere. So how do we target consumers when we know that there's so much transient movement through the day? So we actually left out Toronto, we left out Montreal, and we identified markets that have less movement during the day. Because I don't live at the Globe and Mail building. I live at M6S, so I am a downtown verve. So how are you going to target me during the day when my phone is with me and I'm at the Globe and Mail building? So just understanding a little bit, taking that variable out, we need to still dive into that because it's hard. But no offense to anybody who lives here in Burlington, you don't go to Burlington unless you live in Burlington. So we kind of anchored a little bit more around areas that have less movement during the day as well. But all of these things have to get that alignment across, because especially in a risk model, they call something called depopping. It's like if we have too much saturation of risk in an area, they start hauling it out. So the last thing I want to do is think I'm brilliant again and go and have a strategy, and then risk says, oh, we actually have to shrink our appetite in that market, and then we just wasted a bunch of money. So it's that stitch up along the journey, verifying those really important components of market alignment, and then we selected areas outside of major urban centers just to be able to take that variable out.
Maybe just because I had the really good fortune of marrying a Quebecoise, I got to ask a Quebec question.
Yeah.
Top line, I'm curious if you've got any sort of internal hypotheses or more thinking about the kind of results you saw there, because I could think of 3 things right away. The segmentation was off, the product offering and message didn't resonate with the audience, or there's a parochialism in the Quebec market, which is a polite way of saying it. Does Sonnet have a brand issue with a non-Montreal-based Quebec audience? And I'm just curious if you've done some internal thinking about that, and any lessons or observations or next steps you might be executing.
Yeah, no, great question. So we actually have really strong brand awareness in Quebec. I am originally from Alberta, so I am not a French-speaking anything. When I have a team in Quebec, and so we do brand vitality studies and everything, and in Quebec, they actually think we're local. Sonnet is what they think. So we're gonna not let this Alberta-born marketer that only speaks English and Japanese at one point in my life ruin our perception of being a local brand. So we have actually really brand high brand awareness through what I would say is really the team over time has done some good job with the local resonance of media. We don't buy through traditional channels. We only buy local media alignment. So we are sponsoring Just for Laughs. Going back to Montreal, for example, there are local cooking shows that are Quebecois. They're not the national view version. We've done some very local pieces like that. We also just launched our adulting campaign, and we adapted it. We didn't translate it. So we actually worked with a Quebec-specific agency and completely adapted the entire campaign for that market with the same insight that, adults and adulting is stressful and busy and works on fine margins, as we say in my house. Like, if the train's not running on time, like, I might not pick the kid up. He's going to be sitting on the curb because there's not a lot of room to get things wrong. So we've spent a lot of time on that piece. I think specific in the segmentation, we did do the Prism QC work and had a specific Quebec segmentation model. Now the sample's thin because we're not that big there yet. So I think that reflects a little bit more of the thin sample of the segmentation model, and we need to continue we've embedded the segmentation into our quotes. So all of the quote volume that's coming through now is appended with both our internal quality metric and segmentation. So I think it's a work in progress is what I'd say. I think it's more a reflection of the segmentation model maturity at this point versus our resonance in market. We still need to work on that, but thankfully we've been able to secure good brand awareness and consideration. We just need to get the scale and volume. Yeah, 3 minutes. Hi.
Hello. Speaking of Quebecois audience, have you thought of partnering with publishers like Radio Canada in order to increase the audience reach and possibly take an advantage of data clean room technology?
Yeah, I think that, we're currently going through our own marketing mix modeling strategy to kind of take a look broadly. Up until last year, our media investment in Quebec was nominal relative to the national investment. We've shifted that substantially, and again, historically, it was spent a lot on brand. So now we're looking to get more targeted through the FSA testing, and we are trying some like digital radio and podcasting type engagement right now, but we do need to get further down the funnel and not stay in this awareness space, but drive conversion. There's one over there.
Hi, so I really enjoyed how the theme of the presentation had a strong theme of alignment. Do you have any, best practices to share to generate that level of buy-in when you bring, the segmentation into your company? Because, for example, the segmentation has like 10 groups, and a comment that we might receive is, 10 groups is still a lot to remember. How do I use this data? How should I think about using this within my team as a PM, let's say? So I'm curious to hear your thoughts on that.
Yeah, it's tricky, right? Because it's really company specific. In our context, I would say that we are a company of underwriters and actuaries. So leading with data is the language that they speak in. So that's where I'd start, is thinking about your audience always. As a marketing communications person, you need to consider who you're speaking to and adjust your approach based on where they're at and what they're ready to receive. So going through, and I think that the wheel you saw there before, like Cassie has even said, this is too many, and I was like, I don't disagree. But as we're refining and figuring out where we're going, we need to, I'd rather start with more and be able to refine. So as we've done the roadshow, like quite literally throughout the organization, presenting to different groups, Cassie has done like 10 different presentations, because you need to meet them where they're at instead of try to shove your narrative. So if they're only able to consume in their world this much of the data, don't come with the full pie. Come to the personal insurance team for property and say, here's a view on property. Like, what are your thoughts on this? Get their feedback, and then you get their buy-in, and then they're part of the solution instead of us being salespeople. I know that might not have been square on what you were asking, but I think that kind of would be my approach.
Catherine, thank you. Thank you so much for that great presentation. Just a few quick takeaways. I know a lot of this was about strategic alignment, but that is so important. There's so many segmentations we build that don't have strategic alignment, and sometimes it's hard to action. And I know you think it took time, but I think Catherine and I met the first time maybe less than a year ago.
Yeah.
And she went through alignment, building the segmentation, and actually is out there using the data and information for activation, which is just incredible. And last, which I loved, don't be afraid to fail, maybe just a little bit, but really it takes courage to do that, and that's really how you learn. So thank you for sharing your experience in the presentation. Catherine, it was great.
Thank you.